How's everyone doing? Good afternoon, good morning. Who's in the building? Come on, say hi. Otherwise, I don't want to be doing a live stream where I feel like I'm speaking to golf. So come on, just say hi, and then we can get the ball rolling, yeah? Banner the comments. Where's everyone at? I'm gonna make it quick today. My voice is actually going, so I don't want to jeopardize my voice too much by doing this live stream. So it'll be a quick one today. Is there nobody here? Hello. Okay, cool. I'm just gonna get started then. So today's topic is how to trade with a full-time job, right? So we're gonna get into that in a minute, but before I do, let me just briefly recap last week's trade. So let me just share my screen quick. Can you see the screen? Hello. Testing, can you see the screen yet? Lovely, glad you can make it, Lawrence. I love Lawrence. At least you're one of the traders that's actually, committed and engaging. And great, appreciate it. I thought so. Share screen. So, there we go. Okay, so this was last week's trade. It was a cable short. I was at the time anticipating price to come all the way here, take it at equal lows and potentially these areas of liquidity, as you can see, but that is more of a Hollywood trade. Where I did decide to bank profits was approximately a 5R, simply because of obviously the boomerang pattern, 1, 2, 3, 4, 5, as you know. So the boomerang pattern was in confluence to fake out, and I believe this is one of the trades that I covered last week as well. You can see it was a liquidity grab of this structure, it's a liquidity grab of the actual pattern with an order based off this indicator that I use. That was a fantastic trade, really good trade. Aside from that, it was just that. My conservative account, I didn't really take a trade. This was a decent little winner on the aggressive account. But now we're trending up. So I'm expecting price to come up all the way towards this particular trend line. Obviously, if we see some price action, I may be enticed on the aggressive account to take a short towards this area of liquidity before going long. And if we do that, we may have a larger potential pattern in place somewhere, but we still don't really know where until price action delivers some form of a liquidity grab, if that makes sense. Yeah, thank you. It was actually a really good entry. Pretty textbook. Not sure if it was the news or anything, but it was just an order that set. That's the thing, when you diversify your strategy and your entries, you can more or less trade fearlessly. So if you've got a strategy, everyone, and there's different grades of that strategy, whether it's A star, B, and C. If you're trading all of them in your system, that's gonna affect your psychology, to be fair. So my little tweak to it is any of the high probability A star trades, I take that specifically only for one master account connected to several slave accounts. That's only for that. So a trade like this is an aggressive account. I will take that fearlessly, knowing it's an aggressive account. The risk is different, the account is different, the entries diversified, is just different. One of my biggest turning points was diversifying my strategy rather than trading everything all at once, because that means you're trading different elements of your psychology, if that makes sense. Obviously, a high probability A star trade, you're going to be 100% confident in it. Whereas an aggressive trade, because of the data, it's not as strong as a high probability trade. Your confidence level is not going to be 100%. It might be 80 or 70%. This is why trader struggles with psychology. So I highly recommend opening up multiple trading accounts to reflect what entry criterias you normally implement as a trader. And obviously your high probability A-star trade, that specifically, just leave that one alone, only for that particular setup. Okie dokie. So yeah, that was really just the trade that I was expecting. The reason I was selling it is because I was monitoring the structure for this to get taken out, potentially these areas of interest, as you can see. But to be on the safe side, I normally tend to bank profit way early before a point of interest at a minimum of a 4R. Obviously, in this situation, this was actually a great trade. It was actually a 5.4R. So that was fantastic. But normally, you can see the trades here are normally around 4R anyway. So yeah, I mean, it's a bit like if you're taking a trade, if you're very confident price is going to come towards this point of interest, right? Let's just say you sold it here after a fake out of liquidity, then you can have your take profit here because it should really go to that area. But why not take profit a lot sooner and increase the win rate, if that makes sense? Because there is going to be times where price action doesn't go to your target and it completely reverses, only to grab liquidity on the left-hand side to then continue its move up, right? So it's just something that works for me. I like to be conservative. I like to secure the take profits rather than letting them be hit. Sometimes they get hit, sometimes they don't, but I focus more on banking profits. So with this particular trade, I banked 90% at this area. Then I trailed my stop loss, expecting this to go a lot lower, but obviously price decided to go up. Now imagine, had I held this trade towards the trend line or this point of interest here, this would have been a break-even trade, right? So this is why you need to know when to bank profit, but do it efficiently. So yeah, that's cable. Has anyone got any other questions so far? Okay. Mr. Lawrence, fantastic. Also, Lawrence, congrats on winning that little competition we had in the BLT community. So well done on that one. I have a question. So I'm debating taking full profit at TP1 around 3-4R. Yeah. Instead of taking partials, that sometimes it's not worth holding a small position for an extra 0.5% for days and days. Yeah. Just trade the numbers, to be fair. What I trade the numbers. So obviously, how often does price reverse from 3-4R? You're probably going to realize that there's not much of a difference taking profit at 3R or 4R in terms of how often it reverses from that area. I'm going to guess between 70-80% of the time it reverses around 3 to 4R. That's just my take on it. So you might as well just bank 100% at 4R, right? Either way, know your numbers. Maybe it's 3.3R, maybe it's 3.5R. Yeah, just bank 100. You can just bank 100%. To be fair, you can just bank 100%. What I do is, there's times when I bank 100%. There's times when I bank 90%. I'm not really consistent when it comes to that, so I should really be more mechanical. But lately, I've been banking 100% at TP1, mainly because the market conditions is obviously it's summer, so I need to be a little bit more cautious. I'm even contemplating reducing the TPs to maybe 3.5 or 3R and just getting the hell out because it's summer. The conditions are starting to a little bit slow, rather than leaving partials. Yeah. So what I've been doing lately is with the conservative account, it's all about securing the profits 100%. Just take everything out and then just chill. The aggressive account, what I've been doing lately is I do the same thing. I still bank the majority of the partials and I leave the stop loss management rule in place. So this was an aggressive trade. My stop loss was placed a couple of pips above here. Obviously I got taken out. All right, fine, that ended up reversing. But had it went to Hollywood, I would have held it. But as long as I'm banking 90% at TP1 on the aggressive, and then I can manage it. Or you can bank 100%, to be fair. But trade to your strengths. What I'm doing on the master account for the conservative setups, I'm just banking 100% at TP1, to be fair, because it's the edge. Trying to squeeze in more profits, even though there is times where I see my trade go to 20R, 15R. Okay, if it goes to 20R, the time and effort to hold that, if I've banked 90% at TP1, I've got 10% remaining. That one goes to 20R, which does happen, but not all the time. That's only 2R. Okay, great. It's 2R. You're holding it for a week or two, then it's fine. But you might as well, if you're going to go for the kill, just eat, bounce. That's just my advice. It's just really good for psychology as well. In terms of data and money, you'll probably make more leaving a little bit of partials in the event that it does a runner. But overall, just banking profits and just forgetting about the trade, you're going to build that mental capital and just elevate your psychology. It's going to make life a lot easier. So that's my take on it, yeah. Yeah. Think of market conditions, fair enough. Have you tried just using a trailing stop with the full position open? I have, and it doesn't really work because a lot of the times it reverses from 4R. So I just bank profit at 4R and then leave 10% remaining. For a trade to go to 20R, it happens probably 10% of the time, 10-20% of the time. So, I don't want to be taken out at break even on 8 amazing trades for just 2 trades to go to 20R. It's not my style. So I've been there before. I wouldn't recommend it, to be fair. That's just my opinion, right? You might have your little edge, Lawrence. Okay, so that was a cable anyway. Sweet. Okay, so okay, let's get some questions going on. But firstly, hold on, where is my... Let's add this back on. Let me stop sharing. Camera on. Stop share. Boom. Okay, so trading with a full-time job. Does anybody here trade with a full-time job? And if so, have you got a balance, or do you need some tips to complement your full-time job? No, so nobody here has a full-time job in trades. Okay, fair enough. I was interested. But my take on trading with a full-time job is, firstly, identify, where do you work, right? And what access to computers do you have? Can you trade in an office with the computer, or does it have to be via phone, right? Okay, so Lawrence is quite fortunate. So it can be hard as I'm on the computer all day. I do. Okay, fair enough. Again, there's people that have lorry driver jobs, right? And they still manage. So I think it's all down to, firstly, knowing your schedule, because everyone's obviously unique, right? Some jobs might allow you to open TradingView and trade, then that's fantastic. Then I wouldn't count it as you just trade anyway. My advice is to always analyze your markets and your setups the night before or the morning before if you can. Set your alerts. I'm not sure if you guys use alerts, but set alerts. With the alerts, once they trigger, you already know what risk you're going to do anyway, so you're mentally prepared, and you can enter your trade on the phone. That is absolutely fine. As long as you prepared the night before, you've got your alerts and you can calculate your risk. You can spend 5 minutes maximum to just calculate the lot size and you enter the trade, right? But you have to have the pre-planned analysis the night before, because if you don't do that and you're analyzing whilst you're on your full-time job, it's not going to work. I'm not gonna lie, just don't do it. Analyze the night before or the morning before you go into work and have your alerts ready. Then you can trade on your phone. You can do trading with a full-time job. You just have to have wider stops. Find out if you're going to be using 1 hour highs or H4 hour highs, or even daily highs or lows. It really depends on your strategy. So you can do it. You just need to find that balance where it can complement your trading style and also your trading sessions. So obviously, if you're working in the UK, it's going to be very hard to trade London, right? And even New York, perhaps, right? But you'll be able to if you've analyzed the night before what trades you're going to see in London. So just have your alerts ready so you can do it. Okay, so sometimes you just need to close trading view and it can lead to over trading. Yeah, fair enough. Again, you need to have the balance. I think the best advice is having alerts and also having your analysis ready from the night before. Then you can start when your alert triggers, what is the game plan after that? Sometimes you have to monitor the trade, but then all the confluences doesn't align. So what do? You cancel, you just go back to work. But then before you do that, set your alert at the next point of interest or the next structure that you want it to break, and just chill. Forget the phone, go back to work, ride a lorry, do some construction work, or handle some accounting meetings. I have no idea what you guys do, but just have your alerts ready and update them if the first alert triggers but it invalidates your first scenario and you just don't have the confluences. But just set an alert there and then and just wait for the next one, go back to work. And if you're working, it might take another 30 minutes, your alert triggers again, then you just go back into that zone. So you can do it. Plus, it's going to help you rather than by looking at every single candlestick. You'll be able to be in the zone without being in the zone, if that makes sense. Cool. Has anyone else got any questions regarding full-time trading with a job? Also, another thing, what you don't want to do is you don't want to be working from the morning to night, and just because you're free in Asia, let's say you're in Europe, and if you're free in Asia, don't trade Asia. Don't, because you need to sleep. If you're jeopardized, you'll be surprised by how many traders jeopardize sleep so they can trade. Don't do that. Don't do that, because you're drained from working the whole day. And just because you've got 8-10 hours of freedom of just to analyze the market in Asia, trading obviously Asian markets like Aussie, yen pairs, etc. Don't do that, because you need to be fully focused. Always trade when you are not sleep deprived. If you do that, don't do it, because you're gambling. You don't want to gamble, right? Hiridesh Mala, how much risk reward is good in trade 2, 3, or 5? How much risk reward is good in trade 2, 3, or 5? I'm a bit brain freezed here. What do you mean? So how much risk reward is good in your second trade, third trade, or fifth trade? Anything, but it depends on your win rate. If your win rate is 10%, you can't have a risk reward of 1-1 or a 1-2. It needs to be really, really high. So the question you should be asking is, can I have X amount of risk reward per trade with a X amount of win rate? Then I can answer your question, because your question needs to be readjusted, to be fair. So that's also correlated to your win rate. Normally you want to be looking at 40, 50, 60% win rate on average, with an average of a 3-4 hour risk reward. Now, obviously, you can have a risk reward of a 1-1 if your win rate is above 60%, to be fair. A lot of 1-1 traders, a lot of traders that trade 1-1 risk reward setups, they have a win rate of like 80%, right? So it is what it is. Damn, yeah, I know what you mean. Yeah, your son jeopardizes your sleep. Yeah, you have to be careful. Lawrence, you need to find a balance. obviously if you're working all day and then your son randomly just whatever happens jeopardizes your sleep, what you need to do, this is my advice, is when my son used to sort of wake up at random times or go to sleep late or whatever, and then I wake up and then I can't go back to sleep because I'm not a person that, if I get waken up at 3 a.m, I'm not a person that goes back to bed. I have to like do something, go on my phone, analyze. I find it really long. So if I get waken up, it's going to be very hard for me to sleep. So you need to find a way to basically back test your son's routine so it can complement his sleep. In return, it can complement you. So obviously, where does it jeopardize your sleep? And what do you mean by that? At what time? Find a way to have a routine for your son so you can at least sleep good. It's harder said than done, but that's my advice, Lawrence, because I had that issue when I just had a very similar issue, and I found a way to basically just solve that. Do you do it at what point? What do you mean, Lawrence? Do you do it at what point? What are you referring to? I'm pretty sure it's like a previous conversation we had earlier. Joseph, I think it's important to know if you will scope or swing trade. Yeah, 100%. One thing's for sure, you're not going to be scalping with a full-time job. It's not going to happen. So that doesn't work. You have to be swing trading. You're going to be able to scope if you've got like a part-time job, right? Scoping with a full-time job and being on your phone, you can do it. There's traders that are successful that do it, but it's hard. Right, I think with scoping, you need to be fully in the zone. Like with me, if I'm gonna do a scope, I'm not scoping on the minute candlestick, catching 2-3 pips and coming out. I would wait 6 hours for a trade. I'll wait 6 hours, and I'll take a trade for a scope, and I'll come out in 15 minutes. Boom, I'm out. But I waited 6 hours for a 10-minute scope. That is the way I will do a scope. I won't just be scoping a candle in and out. Right, because you need to have a system and you need to be fully focused, and obviously know what your personality is. If you're a trader that just you need results now and you're more active than others, then you obviously need to be scoping. And if you have if you've got the time to scope, great. If you're working with a full-time job and you're trying to scope, then you need to change. You need to reprogram yourself, because if you've got a full-time job and you're scoping as well whilst you're in the building site or in the office, in wherever, it's not gonna work. So you have to adapt, and obviously the traders that adapt are the ones who end up succeeding. If you're not adapting and you're scoping because you like the thrill of it, then you, my friend, will be you're in that category where you're a borderline gambler. But if you know how to adapt to your routine and your schedule and come out of the quick gratification results of scoping and the quick rewards, and you adapt to swing trading, then that's what traders do. You adapt. And then if you leave that job and then you have time, the luxury to scope, then you scope, right? So you need to know your balance, to be fair. Oh, did I trade with a full-time job? I can't remember the last time I had a full-time job. I've had many jobs here and there, but I used, I remember years ago, I traded with a full-time job long time ago when I was building a track record with a small account, and I was doing swing trading, to be fair, aiming for like 2-3R, Fibonacci, D-legs, basic stuff, structure, and holding the trades for 3 to 5 days, maybe 2 weeks, just for a 3-hour trade or even 2.5-hour trade. So I used to do that. I used to swing. Yeah, I used to do that. But I'm swing trading. No way I'll be scoping with the job that I had back then. Full-time mom. That's very hard. Because I know how hard it is to have kids. Full-time job, part-time trader. Yeah, that makes sense. Exactly. Look, this lady here is getting it done. Fantastic. I have to respect that and applaud that, because it's extremely hard to be a full-time mom and a full-time job, and you still got the time to trade. So there's no excuse. To be fair, you have to find a balance. There's no excuse whatsoever. But again, you're not, this lady here, she's not going to be full-time mom, full-time job, and full-time trader, right? Unless the job is her full-time job, right? Then fair enough. But if you have a full-time job doing sales and marketing, and you're a full-time mom, you can't really do full-time trading, because there's a lot going on, right? So you need to be doing it part-time and do swing trade. You have to mix it up. You have to find a balance. But also, guys, ladies and gents, when you find the balance, also find what days you can trade as well. Maybe people that have a part-time job, you might work Monday, Tuesday, Wednesday, and you don't work on Thursdays and Fridays. So you need to find an edge for Thursdays and Fridays. You need to adapt. It's all about adaptation. This podcast should be called Adaptation for today, to be fair. I am lady. You just got to position yourself for it and plan accordingly. Why I tailor my strategy to work in multiple sessions. There you go. Look, exactly. She's adapting. You have to adapt. She's adapting to her strategy because of her work for multiple sessions. So there's going to be times where she's working and she can't trade London, but then she can trade in New York. But then you need to obviously have an edge for New York with your strategy, because maybe that particular variable of your strategy might work great in New York, but it might not work in London, or not as good, right? So you have to, trading is more complex than technical analysis, buy and sell, and risk management. There's a lot more to it. You have to grab the whole thing by the balls and just really decipher it, break it down into small components, small elements, and then start picking it like bloody Iron Man and his weird futuristic screens, and then just finding when's the best time to trade, what is the best market I should trade, what is my best entry, at what time does my setup come, at what day does it come, how long should I be holding the trade before it reverses, how often does my stop loss gets hit after a certain amount of time I'll hold a trade. You just need to really, really go in. If you don't do that, you're competing against the traders that do. And this is probably why you are not profitable, or why you're not consistent, because you're not putting that extra work. And I'm sure I'm talking to somebody here. You're probably not putting in the extra work. If this is new information to you, you have to go in after this podcast and live stream, go back and write some notes. What the hell, man? What should I be doing? Okay, take some notes out and just basically get as much information from top to bottom, from your life, your relationships, your trading, your strategy. The hard work is the back testing, which people find lazy, but that's on them. And basically write everything, get the data, and then eventually, once you've got the data, then you know what to do. Then you've adapted, right? You've adapted to your situation. And that's it. If you don't, and you just trade like a headless chicken, and you're trusting your strategy because you practiced it in the past, and it says you have a 60% win rate, but you should still trade anyway, but yet you're still struggling, and you're like, oh shit, I'm not even funded yet, I wonder why. I haven't made a payout, I wonder why. You have to put the work in. There's more to it than just risk management and risk reward, guys, ladies and gents. There's a lot more to it. Nice, yeah, I like that. Just adapt to your situation and get it done. Easier said than done. I mean, this is a whole different subject, but yeah, everyone's unique in their own perspective, to be fair. Hidesh, I remember that when you first live traded in Trading Nut channel, it is incredible trade. You buy dollar yen and you take a 15-hour trade, maybe above that, mind blowing. You remember that trade? I think I remember that trade. I called a long on dollar yen. I've got really good photographic memory, but when it comes to technicals, but terrible in real life. I remember that trade. It was a B123. For those of you who know, I'm sure Lawrence know what a B123 is. And it was a 15-hour trade. I took it live on Trading Nut channel, and then I came back, done another podcast, and updated everyone. That was a fantastic trade. But that back then was different, because back then I had so much free time. So I could go in and wait for sales, wait for the breakout on like the 1 minute, 5 minute. Now it's different. Now I'm really busy working with my one-to-one traders, creating content, doing some other stuff outside of trading and whatnot. So now I cannot adapt and trade on a certain time frame, wait for certain confluences. So now I've adapted myself, and now I'm using a higher time frame than the M1 for a breaker structure and confirmation. So I adapt as well based on my circumstances. So I do sort of talk what I preach, what I talk. Now, see, I like and you get what you put in. Basically, yeah, that's it. Okay, cool. Let's my voice is starting to go. I'm fighting my voice. Anything else you guys would like to talk about before we can go over into the next subject? Just drop in a question or whatever, and then we'll get started. All right, in the meantime, also don't forget to like and comment when you can, repost it or whatever. Okay, I'll make this quick because I feel my voice is under attack and I don't want my voice to go, yeah, I can feel it starting to shake. It's about this. I don't even know why. I think it was broken sleep the other day or something like that, whatever. Okay, cool. So let me do my forecast for the week. I'll keep it simple. DXY. Okie dokie. Okay, sweet. So we're currently in $1. Obviously, these equal highs they're quite significant, to be fair. There's also these mini, no, I lied, that's already been liquidated. And we have this as well, has not really been liquidated. So these are just good areas of interest. It doesn't have to go there in the next leg, but it's just a good area of interest. What I like about this one here is that this one has been liquidated first, right? These equal lows, double bottom, has been liquidated. So there's a higher chance of price coming up to this area to liquidate the sell side. So if buy side gets liquidated, there's a good chance the sell side is going to get liquidated. So just because of that information, I would be suggesting, double bottom, equal lows, liquidation. So now we could temporarily be bullish towards this point of interest, let alone the pattern that we have here is also bullish. And we've got this major area of resistance. So everything for me is kind of screaming dollar strength. The trick is identifying an entry point, right? That's the trick. So if I can find an entry point, that'll be great. If I can't, fair enough. At the moment, this is a good point of interest. So I'll be looking at this. I'll set an alert here. Just a good area of liquidity. I'll be looking at if there is a pattern somewhere, but it feels like there could be a little something here. Hold on. I'm gonna go on the H1. Look how everything just aligns perfectly with Elliott Wave 5, the fake out of the third tap. 1, 2, 3, 4, 5. And what do we know with 5? 1, 2, 3, 4. This is all 5. 5, there's normally a fake out. You see that? And what do we have on the left? Liquidity. This is why I personally trade patterns. Because when you don't use patterns on Elliott waves, for example, what about the traders that thought this was the area of liquidity? Fair enough, you'll see some profit, but because there was no pattern, there's a good chance that those long traders were short-lived. This is why I focus heavily on patterns and Elliott waves. So this looks pretty interesting. I wouldn't say it's final yet, but I would be expecting a bearish move to the downside sometime today. Very confident about that. In fact, I mean, I could be wrong, but All right, no. CTI live stream, short term bearish push south. So let's see if this comes into fruition for next week towards this area. So take a mental picture of that, kind of giving you guys a heads up on what could happen in my crystal ball. So a nice little short towards 5 and then a reversal. But the reversal, I need a lot more data than just a reversal of this area, right? There's more confluences that go in line with a boomerang of Elliott wave 5 before it goes long. But for now, short-term shorts. Also, don't be surprised if price action takes that London or whatever and then goes short. Either way, I'm expecting a short towards this area. So that's my game plan. Bearish on a dollar. Keep it simple, stupid, and that's it. So if you can find a bearish move short term, that'll be great. But overall, to catch that, the bottom of the week, the low of the week, then I would definitely be ferreting longs. So just a heads up on that. So short term bearish on the dollar, meaning if I go back to cable, that means it should push up more. There we go. So it should push up just a little bit more. I know it's more or less very likely going to be heading towards this point of interest. So that looks interesting. Euro USD. Okay. Nice little QM. This was really interesting. It was NFP in it last week, but you know me, news is just rubbish, to be fair. Don't even know what came out last week. What I do know, what is important is liquidity, regardless of the outcome of the news. I'm expecting price to reverse from around this point of interest and a big drop. I just confirmed dollar, there's a short-term bearish bias, meaning this will probably push up. But also I'll be prepared for perhaps maybe a larger move. If there's no confirmation here, wouldn't be surprised if it climbs a little bit higher. But either way, definitely expecting these lows to get taken out soon, perhaps on FOMC or whenever the next high impact news is out. So yeah, nice little QM. For those of you who don't know what a QM is basically a left shoulder, a head, a break of structure, but no right shoulder. Obviously, I'm expecting a right shoulder, and that's where price is going to reverse towards this point of interest. This low is in confluence with the 6% extension. It can even go a lot lower, but just to be safe, I'll like to be banking profit here. In the event that price decides to engineer some equal lows, because we can't really predict all that, and if it does, then I'll be updating a pattern with Elliott waves. As you can see, 1, 2, 3, potential 4, potential 5. So this might even come up here, right? And if it does, it'll be great, because that means there may be another large pattern and another large Elliott wave forming right in front of our eyes. But right now I'm thinking 2-3 steps ahead of the chess game, of the chessboard, which is good to do. But my advice is just focus on the next high probability move. So this is not really I'll keep this here just as a guideline, but my main play is going to be the short, right? Wherever that short is, whether it's this move or from up here, I'm expecting a short. Then I can reevaluate whether it decides to go down towards my target, or it might go higher to form, obviously, this larger pattern before continuing south. So a lot of scenarios could potentially happen, but what I'm interested in and where I've got high conviction is the next move, which is down, right? Obviously, this is going to push up a little bit, but the main move is going to be down. After that, I don't really care if it goes down here, if it goes up here, if it does this or this or this, I don't really care, because the patterns and the Elliott waves are consistently updating. So I can't really predict exactly when they're going to reverse at what time. What I can predict with a very, very high accuracy conviction is just that first move. That's where my edge is at. So yeah, I'm expecting dollar strength. I'm expecting euro to obviously drop to the downside. So yeah, this is where I'll leave the euro, and we'll revisit this probably sometime next week. So let's add a little note and then see what happens. Okay, cool. Okay, great. Let's have some random questions or something that you might need some help in, and I can help you out. Could be some advice that might go a long way. So just drop a question or whatever you want to ask me, and I'll try my best to answer it. Go. In the meantime, if you're not part of the Discord, if you want to have access to me, just message me on Discord. But you need to join the CTI server first before you can message me. I don't really take messages from outside of the system, but here you go. Join the Discord if you're not part of the Discord. Obviously, we offer trading accounts, funded accounts, challenges, and whatnot. And mentorship, one-to-one mentoring. We have strategies and everything. So join the Discord if you can, if you're not part of it. So has anybody got any questions for me? Come on. Also, don't forget to follow me on Twitter as well. I'm going to slowly start bringing out my Twitter. I'm going to slowly start bringing out some content, because I believe that's where everyone's headed, to be fair. It's a new sort of, it's all about content, attention. That's where it's at. It's not about reading large documents and all that stuff. So let me post my Twitter handle for those of you who have Twitter, and you can join. Follow, sorry. All right, there we go. So let me see. Vishnu, do you basically trade based on trend lines? No, sir. No, I trade based off Elliott waves that forms patterns. Those patterns are based off liquidity, accumulation, distribution. Once that's all been finalized at the last wave of the Elliott wave, so we need the patterns, we need the trend lines, that's going to filter out all the areas and all the liquidity levels that a lot of SMC traders, ICC traders, they'll just take a lot of the trades. So that's just one aspect, right? There's obviously different aspects of SMC where they'll wait for confirmation or they don't. But what I do is I'm implementing Elliott waves and patterns that is updating in real time, which correlates with the updates of the algorithm that's also updating in real time, because there's millions of algorithms that is constantly updating. And if you can read the liquidity, know when the orders are being filled or not or updated, then you have an edge. And this is where I believe I've got my edge. So I don't just trade trend lines. No, sir. There's a lot more to it. Okay, lady here. Sadly, I'm a US trader, but been apart from Discord a long while. Okay, fair enough. Cool. All good. No worries, Vishnu. Any other questions, everyone? Joseph. Does it include looking at some other pairs? What do you mean by that? Does what include looking at some other pairs? Can you elaborate on that question, please, Joseph? Nice, Lambo Boss Lady 9 found the YouTube. Fantastic, cool. Great. So yeah, guys, ladies and gents, don't, just like and comment on the YouTube channel if you can. If you're from Twitter, you need to join the live stream on YouTube in order to comment, by the way. Still got another 7 minutes. Okay, a request for pound Swiss. What a volatile pair, man. Pound Swiss. I've removed that from my watch list like years ago. It does not like me, I'll tell you that. So let me share my screen then. In the meantime, get some questions ready. And if I've got time, I'll try my best to answer them. So let's start with pound Swiss. Obviously, first things first, what I like to do before I look at pound Swiss is I like to look at cable. Cable's obviously got most of the liquidity and all the pound pairs is going to come from cable. So already, I know, just by looking at cable, I have an idea of where all the other markets are going to go to. So if I look at cable real quick, this to me is showing me that there is a lot of move to the downside. What's interesting about cable is that, imagine, if you're not familiar with patterns and Elliott waves, and this is where I believe I've got a crazy edge when it comes to FX, specifically SMC, is that if you trade just SMC or whatever components you trade, you would most likely see this as a order block, supply level, or whatever. Fine. Problem with that is, even if you wait for confirmation, right, and under lower time frames, you get that confirmation and then you sell it, there's a good chance it's going to go up here because of the Elliott waves and the patterns. So already you're at a disadvantage. Even if it were to drop just a little bit, take out this low on the left and then catch an order, unless you're on the M1 time frame, you might get a short-term move to the south side, but there's still a good chance it's going to go long because of the patterns. And for me and this strategy, the patterns and the Elliott waves is what takes precedence and is a lot more effective than all the blocks and the fair value gaps. Ask Lawrence. Lawrence is actually a veteran when it comes to BOT. He's been trading SMC for a long time, right? And I'm pretty sure he will agree that patterns and Elliott waves will have a greater edge than trading just SMC, ICT alone. You need to have both of them, but the patterns is going to help you. Because if you're not aware of the Elliott waves and the patterns, based on this strategy, by the way, and you're looking for, let's say, a long here because there's a bullish order block, there's a very, very good chance this is going to fail because of the Elliott waves. And that's it. And look, he trades this as well, Lawrence. And what he just said is, yeah, it saves a lot of losses. And this is the thing, where a lot of the SMC traders and ICT traders is they take a lot of losses. That's why a lot of them are break even. The risk reward is great, but psychology is a bit of a mess because there's a lot of losses. With patterns and Elliott waves, it helps you eliminate all the noise and you catch the best trades. So this is where I believe the edges are. But again, got nothing against all the other SMC, ICT traders. I'm just saying, this works for me, it works for Lawrence and other traders. I'm pretty sure there's a trader out there that trades a MACD with just an order block and he has a sick edge, but obviously that trader has tweaked it to make it work for him. So everyone's unique in their own perspective. Everyone can make it work. You just need to find your edge and something to complement your strategy, right? That's my advice. Joseph, do you question you're willing to answer include a short analysis on some other currency pairs? Do the questions you're willing to answer include a short analysis on some other currency pairs? Wait, sorry, I'm by the way, guys, I'm like fasting. I haven't had breakfast. I haven't really drank water today, to be fair. I should do. So my brain's a little bit frozen. So hold on. Do the questions you're willing to answer include a short analysis on some other currency pairs? I can give you a brief analysis. Yeah, I don't really mind. If it's like my actual entry and the checklist, I'm not going to reveal that. That's only for my community and my one-to-one traders. But if it's just basic Elliott wave analysis on a high time frame, I don't mind that. So yeah, go for it. So anyway, so back to Joseph's first question was, can you analyze pound Swiss? Firstly, pound to me looks like it's going to go long short term towards this area, at least minimum, most likely just a little bit higher for the fake out of the boomerang. That's when you can kind of start looking at these points of interest. That's a good area. A liquidity grab of this. This also looks like a QM on the lower time frame. So I'll be looking at these 2 points of interest, this bank level or this high. Which one? I don't really know. This is why you wait for confirmation at either one. But these are good areas, especially this one. So this is a good target. Instead, forget the selling. The actual directions right now, I'll be expecting this to go long. I'll be ignoring this high. This is the power of Elliott waves. So now, cable, pound is bullish. That's where most of the liquidity is at. So already I've got a bias for pound Swiss, which should be bullish as well. And obviously, this high is probably going to get destroyed. You can see there's a bit of a pattern here as well. And already, what can we see? 1, 2, 3, 4, 5. This high is going to get destroyed, so do not sell it there, believe me. We're looking at this high. That's also going to get destroyed because it's inside of the pattern. And there's a lot of momentum here, right? When there's a lot of momentum, that I translate it as to no traffic. When there's traffic, there's resistance. When there's no traffic, I'll be looking at this high to get mitigated. So that's my target on pound Swiss because it's outside of the pattern. The point of interest is outside of the pattern. And with the boomerang, we are trading this 1, 2, 3, 4. We're doing the boomerang, right? So boomerang is a fake out. The reason it's called a boomerang, for those of you who don't know, because I'm anticipating a fake out. This is a boomerang shape. So yeah, that's what I'll be expecting for pound Swiss. So definitely further upside. But again, to be conservative and to be extremely safe, just target this trend line. To be fair, keep it simple. I missed my entry this morning on pound Swiss long. I'm pretty sure you can probably get another entry somewhere. Fine, you've missed London, but maybe tomorrow, just don't trade today. Maybe, let this get liquidated or whatever. And then maybe tomorrow you can look for another long, right? Oh, Lawrence said, oh, my bad. Fair enough. It was my M5 entry, but M15 to become an entry. Fair enough. Okay, Joseph. So go. Mike's on you. You said you wanted to ask me a question. I'm willing to answer them depending if I can, but I'll try my best to do so. So yeah, go for it, Joseph, if you're still here. This is quite cool though. Bullish is, cable's extremely bullish. Sorry, pound is very bullish, which leads me to believe Euro pound may be bearish. Okay, so I need to update my charts, to be fair. Oh, okay, so this is there was a trade that I missed here. A trade, and I forecast it with you guys last week or the week before, and it banged to the bloody T. This trade here, I'm not going to go into detail because I don't have time. I called this trade on the 24th of June or whatever. I was forecasting this trade. It actually played out to the bloody T. I would have most likely banked profit here somewhere. This was a mistrade. Bloody hell. That was a mistrade. But anyway, that's done. That played out. This is probably just going to keep on going south, to be fair. That's it. So yeah. For Euro pound, I'll be looking at this trend line, see if there's a bit of a fake out somewhere, and I just ride the trend. So right now we're bearish on Euro pound, might do a stop on this high and then a short. So yeah, okay, we'll leave it there then, since Joseph is not here anymore. Okay, cool. If there's no more questions, I'll give it another minute if there's a question or two, and then I'll wrap things up. No? Okay, cool. All right, let's wrap things up. All right, everyone, have a good day. Trade safe. And remember, DXY, short-term bearish, but we are expecting a long soon. But at the moment, for today and tomorrow, bearish dollar, short-term. Okay, bye everyone. Have a good one. Lawrence, see you in Discord. Take care. Bye-bye.